Next panel, and it's answering the big question, what can be done to bridge the gap? And we've become very aware of the gap this morning. And so I'd like to welcome up Linda Smarden, Linda Watling, Naomi Ballantyne and Penny Burgess. Just first of all, I'd like to thank Partners Life for sponsoring this session, so thank you Naomi and your colleagues who are out there. So I'll just introduce, on my right is Penny Burgess, who is Regional Manager for ANZ, and then there is Naomi Ballantyne, as we will all know, who's the Chief Executive of Partners Life. Linda Watling in the green, who is Technical Claims Manager for ACC, and then Linda Smarden, Regional Director Auckland for the MSD. So my first questions are going to go to Linda Smarden, but I'm just going to give Linda the buttons so that she can run through her presentation. So Linda just has one slide so that she has some information up there that you can understand what she's talking about. So Linda, first of all, many of the audience will have no idea what they might receive through work and income, and I know that I have no idea, and we talked about that in the break, that I have no idea what I would be entitled to, and probably like many people in that research, I'd be entitled to very little, or believe I would, and so they have no idea if they're temporarily or permanently disabled by illness, what they might get and what extras they might get. Can you give some examples, please?
Sure. Good morning, everybody. Yeah, look, there is financial assistance available to people when they've lost their main income, and that can include when people have suffered a health condition, an injury or disability. The way that financial assistance is assessed is based on the composition of the family, and I'll explain how that kind of works as I work through some examples, because we thought the easiest way perhaps to demonstrate for you was to show you some scenarios, because income support is made up of several different components, and it is an income tested assistance. So the first example we thought we would use was a couple with 2 children. So firstly we would assess people for a main benefit. If it's somebody who's recently had a health condition, that would likely be a job seeker benefit. For that sort of family dynamic, a couple with 2 children, the maximum amount per week, if there is no other income, is $350.20 net. If we're talking about a couple here, so if one partner is still able to work and is in employment, if they have an income of over $30,212, there'd be no entitlement to that main benefit. If they have income over that limit, there may be eligibility for supplementary assistance, and I'll talk a little bit about that next. So the benefit has the main benefit, but there is also supplementary assistance that we can consider. Accommodation supplement is the example that I'm going to talk to next, based on a mortgage of $550 a week. So accommodation supplement is a weekly payment, and it helps people with either rent, board or the cost of owning a home. So like I say, the example we're using here is a mortgage of $550 a week. It's not quite that straightforward. There are 4 different levels of rate that are payable depending on the area in which people live. So we're going to use an example based on Central and North Auckland, which is $225 a week non-taxable allowance. This type of assistance can be paid to people who aren't on a main benefit. So if people have income, we can assess what they might be eligible for. They may be able to get some accommodation assistance from us. The third part of the payment is the family tax credit. So Work and Income pays this assistance to people who are on a main benefit on behalf of Inland Revenue. For a family with 2 children, and those rates are based on the ages of children, so we've got 1 child under 15, 1 under 12, that would be $157 a week. The cut-out point for that is $74,000. But we will pay it for people who are in receipt of benefit. People can elect to still receive it through Inland Revenue if they choose, but we will normally include it with the benefit payment. So that is a total of $732.20 a week. There may be other extra help that we can consider, case by case. Disability allowance, which is an allowance that helps with regular ongoing costs that people might have related to a disability or a medical condition. That's based on actual expenses that people incur, and it's up to a maximum of $61.69 a week. That is something that we can also assess for people who are not in receipt of a main benefit. So that's example 1. And the second example that we thought might be useful for you was that of a sole parent with 1 child and unable to work. So the sole parent maximum rate per week, $300.98. The accommodation supplement example we used was on a rental of $450 a week. And again, we used that Auckland Central Area 1 example, which would be $160 a week. And the family tax credit payment of $92 a week. So again, a total of $552.98 for a sole parent with 1 child. The disability allowance could also be considered. That's available right across the spectrum.
Thank you. Now, the next question, I've written an article about this and it's gone in one ear and out the other, so hopefully you can help remind me and the audience. How does having income protection insurance affect your benefits?
Okay, so if people have income protection insurance, there will be an impact on the rate of benefit that's payable, and it really depends on what type of insurance people have, what that impact might be. So any income-related insurance, income replacement insurance, would be charged as income, and so we would assess that, and it would reduce the rate of main benefit that was payable, and that income limit that I talked about in terms of the cut-out rates would apply. If people have health or disability-related insurance payments, which is direct reimbursement of expenses, that's not charged as income, but it may affect things like a disability allowance, which I talked about, because the extra costs that people incur may in fact be covered by those insurances. Mortgage protection insurance, which some people have, those payments are not charged as income, but they would be taken into account more when assessing the accommodation supplement. So the amount of mortgage that one has would be calculated taking off what is covered by the insurance. So yeah, the insurance would have an impact on those rates there. They would be taken into account, and we would by and large charge them as income, and in some cases they would reduce the costs that we were able to include in the assessments of what people may be eligible for.
Thank you, Linda. I know it's often said that we live in a double income economy, that it's very difficult to live on one income at all. And thinking of if your partner's earning $30,212, I wonder who in this room could actually live on $30,212 as a family for a year. I'm sure it's fairly small. And living on benefits $732.20 with everything all up for a couple, again, without insurance cover, this is what you could be on. So next we move to Linda Watling, who's from ACC. Sorry, technical claims manager from ACC, and I often think, although I'm told I'm wrong, that we're lucky to have ACC, but of course we pay for it. And we receive our entitlements. But I wondered if, Linda, if you could outline what somebody disabled by an accident, because we now know what somebody disabled by an illness would earn. What would somebody disabled by an accident earn in New Zealand through ACC?
Well, ACC's levies were kind of taken out of wages for self-employed, employed employees, so people generally don't notice what they're paying, but what we cover is fairly generous compared to some schemes anyway, in terms of 80% of income is covered. That's loss of earnings-related compensation. So if you have an accident, there's a 1 week stand-down period only. So for employed people, If there's an accident at work, the employer is required to cover that 1 week as an ACC payment, and then ACC payments kick in after that. If it's a non-work injury and you're employed, then there's a stand-down period which you'd be expected to cover through your sickness, your sick leave or some such thing, or perhaps no payment depending on your work situation. If you're self-employed, of course, that 1 week stand-down attracts no income unless you've got money coming in still as a self-employed person. But other than the weekly compensation, there's also a lot of support around independence allowance and lump sum. Lump sum is post 1st of April 2002 in the 2001 Act. It was brought back in by the government at that time to help give people some discretionary spending around their loss in the 80 to 100% area. We cover a percentage, quite a high percentage of GP visits, treatment provider visits, transport to treatment, even I think that was mentioned a bit earlier, transport to treatment. We do provide transport to GPs, hospitals, therapy assistance. It was a no-fault scheme too, I think, which is fairly important to emphasise here. ACC took away the ability for people to sue in New Zealand. In return, they get immediate cover from birth to death, 24 hours a day, 7 days a week. You're covered. People don't realise how generous the scheme is, I don't think. We're pretty fortunate in New Zealand to have the scheme. It's unique in the world and very generous and often invisible. We fund hospitals, ambulances. There's a lot of work goes into prevention in schools, accident prevention, injury prevention. We work with sports groups, we work with the police and traffic to reduce traffic accidents. There's a lot of work that goes into the infrastructure of New Zealand to assist Kiwis in return for taking away that right to sue. So.
It's interesting, through no fault of the MSD, there's a big gap between what we get from ACC if we're injured and what we get if we become ill, and that gap that we're talking about is filled by the insurance industry, or should be filled if people would take out policies. It's an interesting thing is that do people understand the difference between the insurance that they're getting from ACC and benefits they get from the government if they fall ill?
There's a bit of a perception that ACC is a benefit. I think probably because both WINS and ACC are governed by legislation, so we're very tightly monitored and regulated by legislation. But at the same time, ACC does not penalise a client for their partner's income. It's not income tested. It's very much individually assessed on the person's loss physically or financially. And they could be living with 3 people, 5 people, they could be married, unmarried. They're still assessed on what their personal individual loss is directly.
Would you like to, obviously we're a world leader in terms of accident insurance, and I'm sure there's no one here that would deny that. Would you like to see our health covered as comprehensively?
It would be great if that could happen. It would certainly help New Zealand taxpayers filling that gap. The 80 to 20% gap might be something that insurance companies could consider looking at for cover as well. Bearing in mind it's an accidental injury related insurance only. A lot of people perceive that it can cover illness as well, but it just doesn't. It doesn't. There's a lot of misperception out there around that, and people do fight very hard to keep their ACC when they realise that injuries are settling in. There's maybe an illness such as diabetes or heart disease coming into play. They do fight exceptionally hard when they realise that there's going to be a difference in income at that point in time.
I've seen something very similar to that in my family where there was a shoulder injury and she was absolutely annoyed that it wouldn't be covered by ACC and that you'd have to wait X number of months, but there's that lack of understanding between accident and illness. So thank you. We'll move on to Penny, who's going to from the ANZ, so Regional Manager for the ANZ. You deal with customers more more directly. Do you understand? Do they really understand that they need to be prepared?
Look, I think the challenge is that it's actually really hard to understand the value of thinking about these situations until you've had a situation or someone close to you has had a situation, and society, we learn by people around us, and stories become really important for that learning. But the challenge is we've still got this stigma or this sort of social taboo about talking about money. And I love Rukingi, wherever he was, he might have just snipped out. I love the fact that he asked his daughter about income protection insurance. You know, if every single parent asked their children about that, would actually be quite a big step forward. Yeah.
I know you've got some strong thoughts about how we bridge this gap, and is it just insurance?
I think the first thing is working out what's really important to you to protect your life, to protect that lifestyle, what aspect of your lifestyle is most important. And the other piece is that it changes quite regularly. So for me, my needs changed quite significantly when I had my first child, and we needed to think differently about not only if my husband and I are ill, but what happens if Claudia is ill, and Diana talked a little bit about that before. Insurance is a really good option, but it's not the only option that we should be talking to our customers about. It's things like building up that emergency fund, it's potentially being prepared to sell an investment property, but both of those options, there's a time element to it. So to build up an emergency fund, that takes time, and it assumes that you've got some discretionary income that you can put aside. So insurance may be a good option for those customers that can't build that up. And the other problem that I see often with property investors is the theory that they can sell off an investment property, particularly in Auckland, to release some of that equity. But I had an example a couple of years ago when my ideal was that I'd sell my investment property to pay for my maternity cover, to have my year off, put my house on the market. I didn't get one offer. So it wasn't an option about selling for, getting to a happy point between a vendor and seller. I didn't have anyone to buy my property. So, and we don't talk about those situations enough. Yeah.
I think we often you have plans and they don't necessarily come to fruition.
That's right.
Yeah. So moving on to Naomi, who's our other industry representative here. Look, we know that there's a huge number of products out there, and I, in fact, when I write about them, get confused. And even though I know what all these products are, I'm confused to where they sit. You know, I wrote a piece recently about, some of you will know about the Countdown bill insurance. They're supermarket insurance that covers your shopping whilst you're ill. And you know, at first of all, I thought, well, this isn't really insurance, but it is, and it may only be a small amount for people, but it actually gives them something to live on. And so products like that are probably important for people who can't afford the bells and whistles that we think that they should have. But I'm wandering off the point there a bit. So we often hear about critical illness cover, TPD, and mortgage repayment. Do you mind just giving us a breakdown for those in the audience who don't know about them, what these products are and what they actually do?
It's interesting because we talked about trauma insurance or critical insurance earlier in association with income protection insurance, and I saw a number of people around the audience go, what? They're not the same thing. But actually, critical illness is a lump sum payment if someone suffers from one of the specific illnesses. So for some people, you could see them believing that a lump sum payment if I have an illness will allow me some time before my income needs to kick back in. There's also people who get confused about medical insurance and also equate that to a form of income protection. And I guess it is in the sense that medical insurance allows you to get your treatment quickly and get private treatment and get different optional treatment than you otherwise would publicly, so you can get back to work sooner. But actually those things are specific types of covers for specific purposes. The lump sum is a one-off. You've been paid it, it's done. And then if you don't go back to work, in a period of time you may find yourself with a big gap similar to your savings. If you use your savings and then you're still not back at work, when you run out, that's a major problem. Or alternatively, you have multiple illnesses over your lifetime and you've used up your savings already, or you've sold your property and it's gone and you've lost your income again. So the sorts of disability income or income protection type products that we sort of are concentrating on here are the ones that just replace your income when you're sick, and there's no specific list of causes that make you sick. It's if you get sick, this is what we do. It covers you for as long as you're off, with some restrictions around some choices of payment term, but it's a long-term benefit coverage, and then when you go back to work, you continue to be covered for the next time. So the sorts of income protection products I guess we're talking to are the ones that allow you to continue to live because your income's been replaced, as opposed to your income stopped. Here's another form of money that may or may not trigger, depending on what you're sick from. Does that help?
Yes, thank you. Obviously, the products are often aimed at middle and high income earners, but lower income earners often have more of a need for them. Do you mind commenting on the affordability of the products?
Yeah, again, I think that's a myth that that they're designed for sort of middle to high income people. They're actually designed for people who will lose an income and suffer financially if they get sick. And there's a misconception about the sorts of pricing that's charged. And I did a little quote quickly, one of our own quotes. For mum and dad, both on $50,000 each. He's a self-employed builder, she's a teacher. They're both 35, so young kids, perfect sort of age to be worrying about insurance. And with a 4-week wait, so that's because you said that's as long as they can hang around, and a 2-year payment term for each disability. It's only $25 a week for those people. If you extend out the waiting period and make the payment term 1 year instead of 2 years for each disability, you're down to $12 a week. It's affordable, and that's a full bells and whistles income protection policy. You can restructure, you don't have to cover the whole of your income with an income protection product. You can just cover what you think you desperately need to survive while you're ill, so you can reduce the amount of cover. There are other types of products, the ones that cover your mortgage only, so you take the strain of your mortgage payments off the family in the event of illness. Mortgage protection covers. There's bill protection or household expensive type benefits that cover your bills if you're sick. So you can structure in a lot of ways. You can change the waiting period, make it longer, which makes it cheaper. You can change the payment terms. Some companies even offer payment terms as short as 3 months. So it'll cover you for any one illness for 3 months. If you're willing to have at least some cover rather than none, that's incredibly cheap in terms of the type of cover. So actually I don't think that conception is right. The problem is we haven't communicated that well enough so that people don't have this perception that, oh, those types of benefits are too expensive for me.
That's actually really interesting, and I'm often being attacked by readers because I dare say that people could spend less. I'm told over and over again that New Zealand's a low-income economy and nobody has any spare money. But I'm sure that a lot of people can find $12 a week or $25 a week with ease. I mean, you know, just cutting down on their phone expenses, for example, they can save money. So it's even for people like me, it's complex. And you know, when I took out income protection insurance, because I read every last detail, it took a lot to work through it.
Yeah.
How do we go about finding out what people's needs are and how they address those needs?
I think that's a really interesting thing, and this Mind the Gap seminar and this type of publicity is exactly what we need to raise awareness for people about the concept of the product, kind of affordability of it. So this kind of exercise is really important to start to get people to think differently. But actually, for the most part, this is still a product that needs to be sold, and both of the people sitting here who had the product talked about it being sold. They need to understand why they need it. So the facts that are coming out of this seminar are fantastic for that. And then they need to understand how to structure it to best fit their affordability, their needs, the types of bells and whistles that are applicable to them that they want. And so that really leads us to say we need more people talking to people about these products. We need more people in banks talking to them. We need more advisors out in the marketplace talking to them. We need more people talking to people about what we do. And this kind of information, I think, helps those people to do their job.
I think this website would be helpful as well in terms of just getting information out to people. Question from the floor to Linda Smarden. Linda, can you please restate clearly the level of a partner's income at which no main benefit would be payable?
Sure. So that was for the job seeker benefit, and the example that we were using was a couple with 2 children. The cut-out point for the main benefit is $30,212 gross. Could I just add perhaps to that, the supplementary assistance that people may be able to still get, so the accommodation supplement, there are different income cut-out limits for that. So for that area one that we talked about before, it's $77,012 gross, and that's down to a lower level of $45,812 gross, just depending on where people live. So people could have an income over $30,000, and there may be some financial assistance that we would be able to assess for them, and we would do that looking at their circumstances case by case.
I have some questions for Linda Watling from ACC. First of all, the 80% up to what's the maximum income that's up to? So there is a ceiling for that.
The ceiling for paying the 80% is, I think, it's around 88,000 per annum, and the maximum weekly compensation payable is also at about 1,800, I think, per week. So if you're earning over that particular amount of money, if you want to be paid the difference, you need to insure that extra, because we only insure up to that particular amount.
So my reader who claims that he can't save on 150,000 is going to be in the proverbial if he ends up on ACC. Can you please explain the importance of Cover Plus Extra for self-employed clients?
Cover Plus Extra, it's one that self-employed clients can actually pick. They can choose the cover, but generally it's related to the previous 3 years' income, so that they can't just decide they're going to take a pie-in-the-sky cover of $200,000, insure $200,000 worth of income if they've only earned, say, $50,000 or $60,000 a year over the last 3 years on average. So ACC will be generous and allow them to cover a little bit higher, but in case of higher earnings in their business, but it's generally realistic in terms of what people are expected to pay and what they can choose.
I was on ACC about 2 years ago from a cycling accident, and it was interesting because I'd chosen not to take Cover Plus Extra, and because I have savings, and when the amount came through, because of course it was 80% of what I declared to the government as to Inland Revenue as my income, and when the payments came through each week, they looked quite small. but I listened to Penny and I had savings. ACC, as well, please clarify the issues around the understanding of degenerative diseases. Have we got all day?
There's a little bit of, obviously, a bit of press around that. Degenerative diseases are not covered by ACC. They're not considered to be an injury. However, under work-related gradual process disease and infection legislation, people can be covered for disease or infection which occurs in the course of their work. For instance, I guess industrial asthma is one that springs to mind if people have had to work around chemicals, or like car painters who have maybe been exposed to a little bit of fumes. It's considered to be a degenerative disease, but it's covered because it occurred as a result of your workplace activity. But degeneration such as arthritis, osteoarthritis, generally happens over time and based on age and also predisposition and genetics. So it's a fine line at times, but it's generally not covered.
If I just add to that, the thing about income protection type insurances is that it doesn't exclude accidents. So because we have ACC, income protection doesn't say you're not covered for accidents. It just offsets what you receive from ACC. So if they don't cover you for as much as you think you should be, and we base it on your accounts, not what you declared at the tax department, or if it's degenerative, for example, then your insurance just covers all of it, as opposed to none of it. So it's really important to understand that it's not a not accident cover. It covers accidents and illnesses. It just offsets anything, and that's how we keep the price down. So you don't get paid twice for the same thing. But you can certainly get paid for things that you're not paid for under ACC.
I have to say, for the record, that I got from ACC what I expected, and I was very grateful for it.
Yes.
But it was just simply when I simply sat down, and because I was in bed for 7 weeks, so I sat down and looked at the figures and thought, how on earth does your average person live on that? But that, of course, was that, like many self-employed people in this room, that our income on paper doesn't look great. So just interested, Penny, just ask you another question about people come into the bank how many people do actually have decent-sized emergency funds?
it's fair to say not many. But the challenge is, I was talking before about it's hard to think about the what if and the negative mindset. It's very easy to think about the pool and the bathroom that you can use with your increasing Auckland property prices. And we see that a lot. And my ideal would be when a customer comes in to talk about that top up or wanting to do a renovation, that every banker and every advisor is asking them about what if you aren't able to work for 6 months? What happens then? Are you able to maintain what's important to you? And that one conversation is usually enough to help the customer prioritise the plan, but it may take a couple of conversations for the plan to actually get into place.
And I was just interested, Naomi, in one thing that you said that I've never thought about as somebody with an emergency fund was that there might be multiple incidents. And do you see this happening quite often?
Yeah, well, the cover covers people generally till they're age 65. So if you're a 35-year-old and take out this cover, there's a fairly high chance you will have multiple periods of time off work for more than sort of 4 weeks over that period of time. And that is the advantage of these types of products. And also, they increase over time with CPI indexation, etc., to try to keep track with your changing income, whereas a lump sum paid once when you're 40 doesn't necessarily do the job for you through to age 65.
No. Just a question here. What is the maximum payment term for an ACC claim for Linda? And Linda, somebody else texted to say they couldn't hear you.
Oh, for the maximum?
Yes.
For a receipt or?
So the maximum payment term, but if you could just speak up a little bit for somebody who
Okay.
wants to hear you.
The maximum insured wage income is around 88,000
I think the question was the term, so for how long can you be on ACC for?
Until such time as we've helped you to recover and return to work or independence. It's not a finite payment period. ACC is required to work with each client to help them return to independence and work, and that can actually include work-ready programs to help them become ready for work again, activity-based programs around being fit for work, depending on the type of work people have been doing. So there's no term as such. It goes on for as long as necessary until such time as someone has recovered.
And what happens at age 65? Because we've talked earlier about people between 65 and 75 still working. So if I'm age 70 and I'm earning 60,000 a year, am I still entitled to ACC?
Yes, believe it or not. If you've been on ACC for more than 2 years and then you get to the age of 65, then you are required to retire at 65. But if you're over 65 and you're working, you have an injury, you have a period of time when you are able to get ACC for 12 months, and then following that you can elect to receive ACC or National Super after that. And then after that 2-year period, you go back onto the National Super rate or back to work, whatever's the case, yeah.
Thank you. In the absence of any more questions, I will wrap up this section. I'd like you to join me in thanking Linda, Penny, and And on that note, I'm going to hand back to Peter. How did I do it before? I did it before, didn't I?
I think you used the next. Oh, just go back to the start of the presentation.
Oh, thank you. My girls technically challenge about
Yep, all the way to the start. Yeah, so we just want to go right to the start and then bring up that. That's the one. Perfect. Right. Yep. And just bring it full screen.
Right. Okay, well, we've had a rather busy morning. I think we've learnt a lot. It's nice to have the combination of both the statistical base but also the personal experiences, because basically we need, as humans, to know the stories as well as the facts. and equally they're all part of that problem that we have, which is how do we have more conversations? And I think that we're trying to say from this day, we've basically got better material for better conversations, talking to people about why they need the particular product. The question mark is not when you have that open up the conversation. As soon as people hear those facts and that information, they recognise that they do actually need it. But the problem at the moment is, by and large, we don't know that we have this problem, the vulnerability that exists. So what else is there coming out of today? Well, first of all, I'd like to thank all of the sponsors as well as all of the speakers and Diana. But I also want to remind you about what's coming up. On the screen, we have the mock-ups of what the website will look like. There is also going to be a guide to effectively what happens when illness prevents you from earning an income. And that will be obviously helpful advice for people who are in this room in terms of those conversations that you have on a day-by-day basis. We've also got the fact sheet that was available, distributed to you, that will be available on our website today, as well as the presentation from Grant McKinnon. That will be also available later today for anybody to be able to use and take into a different context and use that same material. And also we'll be following up with that online campaign between January and about March of next year that'll be basically highlighting the facts that exist here and inviting people to visit that website. In other words, so we're trying to make sure that that conversation is occurring. It doesn't just happen today. There will be some editorial coverage, there will be some media coverage of the survey material, but we will be repeating those messages throughout the first part of next year so that it does coordinate with the activity of the industry in order to actually bring those conversations and for people to actually look at those products. So thank you very much for attending. Thank you very much for all of those sponsors who made it possible. Thank you for coming. Thank you for all the speakers, and join us for an enjoyable lunch and starting off some of those conversations. Thank you.